Imagine checking your phone on a Tuesday morning. Your trades are deep in the green and you are nowhere near your drawdown limit. Yet your screen shows a red notification. Account terminated. Hard breach. This is the result of a massive shift in the industry. The era where firms kept you on closed-loop demo servers and profited when you lost your evaluation fee is over. In 2026, the standard is live execution, or straight-through processing. This means your trades are hedged with real capital in the interbank market, rather than being limited to a simulation. Because the firm's own money is on the line, human compliance officers have been replaced. An uncompromising AI now monitors your every single click to protect the firm's relationship with its prime brokerages. Under this new standard, the primary hurdle is a digital framework that filters for institutional safety. Passing an evaluation depends on how well a trader aligns with these automated parameters. The algorithm's first trap is the psychological illusion of the dashboard balance. You see a $100,000 balance, but with a 10% maximum drawdown, your actual trading capital is $10,000. If you risk 1% of your nominal balance, that $1,000 loss slams down and consumes 10% of your account's total life expectancy. To survive, you must reverse engineer your positions. Instead of looking at the total balance, start with your 5% daily loss limit. On this account, that means you have a rigid daily budget of $5,000. This math dictates your strategy. Phase 1 is a sprint for controlled alpha, the ability to generate excess returns. You need an 8 to 10% gain by hunting for high-probability setups with strong risk-to-reward ratios. Phase 2 is a test of capital preservation. To satisfy the algorithm's requirement for consistency, many successful traders cut their risk per trade at 50% at this stage. Mastering this math forces you to stop chasing equity spikes. Instead, you become a risk manager, engineering a smooth survival curve. The rulebook contains a second layer of defense: behavioral consistency. The algorithm monitors the mechanics of how you trade, regardless of your profit and loss. This chart shows the lot size deviation rule. The AI tracks your average volume. A sudden spike in lot size is flagged as gambling behavior, which can lead to a payout denial or account termination even if the trade wins. The second silent trap is the news trading restriction. In a live execution environment, you are typically forbidden from opening or closing positions within 2 minutes of a high-impact event, like CPI or NFP. This exists because liquidity providers cannot guarantee fills during major data drops. The firm refuses to expose their capital to extreme slippage, the difference between your expected price and the actual execution price. To understand the risk, look at the physical frenzy on a trading floor during a major release. Prices become unhinged. Institutional models automatically freeze out retail traders during these windows to protect the integrity of the live market. The algorithm tracks these errors meticulously. Accumulating 3 minor soft breaches of these behavioral rules will automatically trigger a permanent hard breach and end the contract. These rules act as guardrails. They ensure you are trading within the strict parameters required to manage live institutional capital legally. Passing an evaluation in 2026 marks your transition from a retail speculator to a contractor managing other people's money, or OPM. Professionals treat this as a business. This involves setting up corporate entities like LLCs to manage income and deduct evaluation fees and software costs as legitimate business expenses. Your consistency record is now a professional asset. Many firms issue blockchain-verified proof-of-trade certificates that can serve as a resume for high-tier capital allocation or hedge fund roles. Global regulatory standards mandated by institutions like the Bank for International Settlements are the new benchmark. These transparency standards ensure a firm actually has the capital required to move large profit splits across borders. To navigate these rules, you can download our prop firm comparison matrix and use the FXNX position sizing calculator to ensure your strategy meets these consistency requirements. The transition is challenging, but embracing this institutional mindset, backed by FXNX's infrastructure, provides a path to a sustainable career as a remote fund manager.